Trial balance shows all accounts/balances a company has. Order of accounts in a closing process. REID, revenue, expense, income summary, dividend. Expense accounts, records all expenses. Cash basis accounting, revenue recognized when cash in, expenses recognized when cash out. Tracks cash exactly, matches revenue/exports poorly. Adjusted trial balance. Trial balance after adjustments are made. Identify each of the revenue or expenses. 1. Invoicing client to be paid later. 2. Credit purchase. Pay next month. 3. Pay for a year's max point sub. 4. Being paid up to 4 years in front for 4 years service. 1. Accrual revenue. 2. Accrued expense. 3. Deferred expense. And 4. Deferred revenue. Periodic reporting. Finances must be reported in distinct time periods. Revenue accounts. Record of income. Accrued revenue. When payment for a service is received in a later period than it was earned. Accounts included in a balance sheet. Permanent accounts. Remember, expense accounts are considered temporary. Normal accounts. Used to show cash flow during an accounting period. Reported on income statement and zeroed out at the end of an accounting period. Real accounts. Permanent. Exists from first day of company. Shows assets, liabilities, and owner's equity. Deferred expense. When you pay expenses in advance, like paying for newspaper delivery in a year in advance. Accrued expense. Expenses that do not occur and get paid in the same time period. Identify basis method of accounting. Joe records an expense when he receives the bill before paying it. Mary records expenses only at the time of paying. Joe is in accrual-based accounting, and Mary is cash-based accounting. Permanent accounts. Always part of balance. Income statement summary. Shows all revenue and expenses, only used in accounts closing process. Dividend accounts. Record of distribution of a company income to stockholders. Reason for periodic reporting. Offers the ability to predict future financial information, i.e. sales, expenses, and staffing information. Dividends. Amount to be paid to investors. Process for closing income summary account. Debit income summary account and credit retained earnings account in same amount. Post-closing trial balance. Tells all accounts and balances after all closings are finished. Statement showing most accurate balances. Adjusted trial balance. Process for retained earnings statement. Subtract dividends from net income resulting in current retained earnings. Deferred revenue. Payment given upfront for services to come later. When payroll processes extend over a financial period. Accrued expenses and salaries payable. This basis method of accounting gives the truest picture of a company's finances. It is the accrual basis of accounting. Revenue and expenses are recorded when they occur and recur over time. Major characteristics of real versus normal accounts. Real accounts are permanent and accrue over time. Normal accounts temporary, zeroed out each period. Time period principle. Businesses' activities can be segmented into short specific time frames. Accrual basis accounting. Revenue recognized when earned, expenses recognized when received, and matches revenue/exempt well, tracks cash poorly. And temporary accounts. Accounts that are zeroed out each accounting period. They are not permanent. And revenue accounts, expenses accounts, owner's drawing account.